What up, yo? It's Zach Bradshaw, the long-winded guy here. And I am starting a new channel. This is going to be one of the first series in this channel. It's going to be a learning channel where I'm basically teaching myself different things and then not necessarily teaching other people, but presenting this in a way that I can go back and look at it for reference, but also so that maybe some of these specific videos or some things that come up, I can send my friends or anybody else to specific videos where I'm talking about certain things. I'm definitely not an expert when it comes to trading. I only do a little bit of crypto trading right now. I've traded in Forex. I'm working on investing in stocks and things like that as well. But this is basically going to be like Zach Learns Trading. So follow any of my trades at your own peril, but I'm pretty much just going to show you all of my trades here. You can even see all of my account on Coinbase, and it's not a very big account, and that's part of the reason why I am sharing these videos, right? I don't have a whole bunch of money on the line here. If I did, I probably wouldn't feel comfortable sharing the videos because it would put more pressure on me to like get decisions right and things, which this is really about learning and then documenting the learning process, right? It's not about getting these trades right. If I was trying to get all these trades right, I would like probably do some meditation. I would listen to like certain music while I trade every single day, and I would definitely not make videos about it. But as I make some of these trades, as I teach myself these different things, I want to, document it, and then potentially, part of it, one of the things that I learned about learning is that if you want to learn something really well, learn it basically assuming or learn it in a way such that you can teach somebody else. So that's basically what I'm doing here. I'm learning about trading. I'm learning about investing. And so I'm going to record this. And this is Zach's first episode of his trading diary. So feel free to troll me anytime that I make bad trades. Feel free to, voice your comments or concerns about any of the other dumb things I do. And if you notice, like, you might like this indicator, or hey, you might be missing this, maybe you should check this guy out, please post those comments. I will be more than happy to go check out those resources. For now, the main two traders that I pay the most attention to is Dan from the Chart Guys. He's pretty good at trading, and he keeps things super simple, and has really good set rules that are really easy to follow, right? It's really easy to watch several of his videos and, maybe watch 10 or 20 over several days and then see how he uses his trend lines, how he uses the different indicators that he uses to get setups for trades that he likes, and then how he makes decisions about which trades he's going to take and which trades he's not. And that is, pretty much how I use Tone Vays as well. Tone Vays, the Chart Guys, he pretty much uses trend lines. He uses the RSI levels, and he uses the exponential moving averages, the 12 and the 26 for most things. I think he uses some different moving averages on shorter time frames. But this is just one way to trade, right? There's like 1,000 indicators. And this is one of the simpler ones that I like, and I see him winning. Essentially, if I were to watch his videos and then when I saw trade setups based on the things that he was talking about, I could tell that I could just follow his systems and win. And so I've, to a degree, incorporated that into my thinking. But the way that I trade is still really new. It's really like I pretty much just make things up and then feel it on intuition. I won't say I make things up, but how can I say this? I just form opinions about things. So like, for example, in this right here, I am in a couple of trades here, and this is a trading zone where I expect things to maybe go up to 6,100. But the place where it's in right now and the shape of this makes me more cautious, where it got really close, especially if you turn it back to, let me zoom in a little bit. If you turn it back to like right here, this to me is what I call like rolling over, where the price it went up and then it like slowly, just what I say, like rolled over, right? It makes like a curved top on the end. In the rest of this bullish move in Bitcoin, whenever there's been these jumps, you can see, whenever there's been these jumps, it pulled back, but then the slant is upwards, right? And then it goes up, it pulls back, but the slant is upwards, right? It goes up, it pulls back, but the slant is upwards. Now, and especially at this point, several hours ago, it doesn't look like it's pulled up, pulling back, or gone up, pulled back, and then is moving forward. It looks like maybe it's stagnant or it's at least changing its pattern. So for me, this is more of like a no trade zone. And I've gotten out of part of my positions, and am waiting for whatever happens next, right? Because that's a lot of what trading is. You can't really predict the markets very well. You react to them, and maybe you form hypotheses and then you test them out with your money on the line, essentially, which is why my account is probably like $300 at this point. I do have another Binance account that has actually more like total value in terms of Bitcoin and US dollars, but it's a little too complex within the crypto space to be able to trade. Like, what I would ideally like to do is to trade altcoins to get more Bitcoin. Just because the altcoins will have gains against Bitcoin at certain periods. But it's really easy to get stopped out on those different moves. So for now, and because I just don't want to trade every day, I want to do my SEO, do the work that I actually do, and then just keep this tab open and watch prices. Maybe set a couple of different alerts and hit trades that I feel like are surefire trades, but they're not that surefire trade because I'm not willing to put more than like $300 on it right now. And I have total positions of BTC. Definitely want to make that clear that I don't care to trade this or really increase my Bitcoin value in this account. I want to make money in this account because I have Bitcoin that I've bought at certain levels and then put it away, and I don't even know how much is in there. It's in wallets that, I have a paper wallet and it's hidden in my house. And that's, the extent of my holder positions. It's not very large. But that keeps me from really wanting to like accumulate, as we're going up, right? So it allows me to trade and then make those decisions just based on those specific trades. So, just to look at my last couple of trades that I've done and just to kind of go through, this is like the whole time I'm doing this, I'm thinking like, wow, I need to be recording this. I need to be recording this. I need to be recording this. And so that's what I'm doing here. So let's just start from this point. I don't want to go back into too much of this history. It's probably not the best trades. Just looking at it, let me see. Yep, looks like I took an L from that 5,400 and then sold out low here. So you can see that I'm not that great of a trader, but I win at trading when I'm paying attention to it. If I get into a position and then, especially in BTC, get into a position and then walk away and don't want to look at the charts for a couple of days, just like, ugh, my head hurts, then I'm probably going to lose because crypto is too responsive. And maybe I win, in the long term. If I just didn't pay attention to it for, several years, then I'd come back and it'd be sitting at $50,000 and I'd be like, yay. But that's not really what I'm doing here. I don't like to trade paper money because I just don't think that my decisions are accurate to what I would actually do when I'm not trading real money. And this isn't that much money, but it at least is real money. And I'm like, man, I didn't need to lose that $30 for no reason. You know what I'm saying? So, it's not the best litmus test, but it is how I'm using it right now, right? So, if we look at these trades that I've made over the past little bit, you can see that I bought at, about 30, let's just say 360. And then I was able to sell a couple of $100 higher, right? Or I guess $100 higher. And then it fell again. I was able to buy, and just to show you the same price action, I'll do it in a moment. And then I was able to buy again down here at the low, like 350. And then I got stopped out because of this crazy move that happened when, it wasn't actually the Bitfinex news, although that could have stopped me out depending on where my stuff was. I'm sorry, I'm not a expert with these trading views or whatever, and I'm not actually using TradingView. I'm using something called Coinigy, just because if I was using TradingView, then I would not be able to help but look at stocks and stuff like that all the time and look for the perfect trade, which is essentially the only types of trades that I make where I'm like, okay, this one looks good. And I will take it. And, if you look at 1,000 charts, you're going to find one or two of those every single day. And so that's part of the reason why I prefer to pay for Coinigy, instead of TradingView, even though I think Coinigy is more expensive probably, for the account level that I would need on TradingView. And, it's what I'm used to. So eventually I will be trading TradingView, and obviously Coinigy is getting their charts from TradingView. But for now, Coinigy works well for me, because I'm only trading these crypto assets, and I already have like lots of charts saved over time, right? So a bunch of those going through May and whatever else, or through March and whatever else, but they go all the way back to when I got into crypto was like right after the top hit in December in 2018 or 2017, and since then I've been following it, waiting for it to go back lower so that I can buy as much up as possible and then trade on the way back up, because part of the reason that I trade crypto is because these gains in terms of percentage are just so outlandish on a daily basis compared to something like stocks where, like, dude, I'll take a 5% day. But in crypto, you have a, you have a 25% day. If we're looking at this candle right here, you see that's a 25% day, and you can see some of my buys and sells are indicated here on the chart. So you can see this buy down here below 39, and then I was able to catch this whole move and cash that out. Then I played around, and you saw a bit of these losses in here. I don't know how far I've got to go back to see me picking this up at here, getting stopped out on part of my position, picking up more as it started to break out to the upside, immediately stopped out of yet another position, stopped out of another position, then bought again, sold out, I'm not even sure why, and then finally bought, and here I got a $700 or $800 dollar move, and then got the last little bit of it, and then I kept some of that, and eventually traded over it. And I basically do things in like 0.05 or 0.005 Bitcoin increments. So I guess that's 500,000 Satoshi increments. And then from there, I remove and I adjust my position around that first trade. So like in this case, I'm expecting, in this area, as it's going through this motion, I'm expecting a move up to 58 or maybe 61. Obviously, now it's already hit 58, but I'm expecting a move up this way. And obviously, like I said, I got stopped out once. I bought. It went down a little bit on a crazy candle. Let's see. This is 5 days ago. Let's just look at this action here. 1, 2, 3, 4, 5. Maybe I need to be on the hourly, or maybe I need to pull up one of my other charts. I'm not going to do that right now because I need to. Well, you know what? Let's just go ahead and save this as Dan the Man, because this is Dan. Oops, it's not accurate yet. This is Dan, Charting Man Dan's from the Chart Guys. This is the way that he usually has his moving average set up. He's the exponential moving averages, the 12 and the 26. And then he uses RSI levels to basically play bounces. That's one of the ways that he does it. He also looks for equilibriums and different trends and sees, risk management, which direction he thinks things are going to break to, right, based on the patterns he's looking at. So you can see here that these supports have been pretty solid support for Bitcoin through this run here. And it's something that he said, like, hey, through the whole bull run of 2016-17, that is, it was like money. So I, especially because I follow him, use this as well, but I also have other indicator templates that I use. And this one, people kind of will probably make fun of me for this one, but this is the one I like the most. I call it Rainbow MAs, and I have a 8 period moving average, and these are simple MAs. What Dan uses exponential moving averages, which weights the most recent price history more heavily than all the price history. But I like to use simple moving averages so that I can build this rainbow thing, essentially. So I have the purple one is a 8 day or 8 hour, 8 whatever period you're looking at. The 50, or the blue one is a 50. The green one is 100. The yellow one is 144 day moving averages. Not many people use that one. And then the orange is a 200 day moving average, and then the red one is the like pi moving average, 314 period moving average. And what they allow me to do is basically see what I think is the best way to know what's in a bull move or what's in a bull trend, just to be able to see how these colors line up. So essentially what I want, when things are moving the best, and let's go ahead and look at an hourly chart that's going to show something like this. When things are moving the best, you have like a reverse rainbow, essentially. So with purple at the top, then blue. Well, I guess it's just a rainbow. Purple, then blue, then green, then yellow, then orange, then red. And so this one, to me, has just straightened out where it needs to be, right? The purple one is not so important because it's just an 8-day moving average, and you see it does provide a little bit of support, but it's basically just a line for me to know, you know, if we have a big drop right here, where the actual price is, kind of. I don't know how to say it. It's not really the actual price, because the actual price is whatever this is showing right now. But I kind of consider like the last 8 days, 10 days, maybe 6 days, price history to know what I would kind of say is like the true price. And that's kind of what all of these moving averages are doing. You're trying to see over a 50-day or a 100-day or a 200-day price period, what is the actual price of this, so you can kind of make judgments about where the real price is, where it's going to go next, right? So for me, when I see these get all straightened out on whatever time frames, I'm usually like, okay, this is likely to go up, but you know, you have to play things in the right way. So you see here that things went up, they went up again, and this is breaking new highs, but not by very much. And then they tanked based on, no, here was that big Bitfinex news. They tanked. I'm not sure whether there was a news catalyst for this or not, but I was watching the charts while this happened. So I got slightly annoyed at myself through this period because I knew that up here, because I'd bought at 53 and some change somewhere down here, that I wanted to cash out up here at the 58s. Or no, I'm sorry, that's wrong. I was looking at the 53s, and I knew that I needed to cash out, but then it pulled back because I like just wasn't paying attention for a day. And I knew that I really needed to cash out up here, just like take that $100 gain from, you know, basically 5,650 to 5,750 was one of the easiest places to get it. Obviously, this was like an hour or so that it stayed up here above 58, and then it fell back down. But hey, I'll take my $100 move. And then I also had a base position down here from 53 that I hadn't taken any profit on. So it made sense for me to go ahead and cash out some of that right here. But I failed to do so. And then it dropped, and I'm about stuck in this upper position. I didn't want to stop out of it yet because I could see a pullback all the way back down here to 53 and then on to 61. So that's one of the issues with crypto where, you know, if I wanted to be playing XRP or XLM or any other crypto right now, and Bitcoin does this, it's going to mess up the ratio. And then Bitcoin does that, it's going to mess up the ratio, and I could potentially get stopped out. And I don't want to get stopped out of positions like that and then see it moon right afterwards. So in this case, of this trade that I missed, I got lucky that it came back up here, and I was able to cash out some of my position at 5,738. And I actually, even when it was down here at 5,738, probably coming off of this one, 5,738, I probably cashed out somewhere in here. I knew when I was watching the charts, and I knew I wanted to cash out up here, or take profits out here, and I just failed to do so. And that's part of the reason why I'm only trading with like $300 in my account, because I don't, I got work to do, right? So, I can't sit here and watch the charts all day. Maybe, and you know, what I'm preparing for is when I have $30,000 in my account, and this can just be essentially, really still probably won't be my day job because it's not that interesting. It's not interesting enough, but it is a, I do FOMO. I do have a fear of missing out when, like, hey, I could literally just buy this thing and it's going to go up in price. Like that, there's really no excuse in the way that, in my worldview, for me to like essentially let my money get devalued by having other assets that are going up and not having my money in them. Same with the stock market or really any of these investments or assets or commodities that may go up or down. But it's important to me that I'm not just sticking in dollars, right? That I'm able to make gains on my dollars when possible. So I ended up cashing out some of my position, but still held. I'm still holding some of my position from 650 or whatever. So that is sitting here at about even, and hopefully it'll continue riding this 100-hour support and go back above this 50-day or 50-hour moving average, and then go on to the 61, maybe 62 or 65. But I'll probably cash out around like 59.50 or something like that, just because that will be plenty of gain for me, and then I can get back out. But with all that being said, if I would have executed this properly, I would have taken some profit here, and I would have bought back in here, because this was like, I thought it was probably going to pull back to like 55.50. And I watched it do this and was just annoyed that I hadn't got out of my position. I was sitting here watching the charts, and it does this. And I'm watching it probably on a 10-minute chart. And because I hadn't cashed out of my position, I didn't have more capital to buy in. At that point, it was, I was probably sitting on like 0.56 and some change here, or 0.056 and some change here, and that was the rest of that $30 was gone. And I wasn't able to then make another trade, which then you saw it go. And I was watching the chart, so I could have bought any of these prices. Let's just say I bought here, see it go another 5%, and I could have cashed out again and probably still kept, or took some profit again, and probably still kept most of my position from this 53, but just got to trade that 5% on the extra $30, right? It's like 5% on $30 is $1.50, but it's worth it to me to gain the experience and then be able to eventually go back and chart all of these, the wins and losses, which is what I do for, some of these already. But it's important to me that I'm watching and keeping a record of how I'm missing trades and how I'm making trades properly, just so that I can go back and, watch these on 2x speed and see what I said, see what I was thinking at those points. Because for me, one of the main reasons I think that I'm going to really excel at trading, and one of the reasons why, when I generally have success, is because I'm super patient. I guess there's multiple reasons. I'm super patient and I can wait for the right trade. I'm super patient to also wait, 10 days or a month and a half on a swing trade. And I'm also, I'm good with these numbers. Like when I see lots of people, do these different charts and they are trying to figure out percentages or trying to work out math. Just very often I know the math before they do. I feel like I'm a little bit faster than most people with this math, and comes naturally to me. So I might as well, take that natural inclination and then leverage it to make more money, right? And then the last reason is because, dude, I have a really strong intuition, and I believe in my intuition, and it serves me very well. And in very many of these cases, I thought this was going to roll over, and it did. And even though it rolled over and it bounced, it still went lower. And I don't really even know how to explain that. That I was looking at the chart, and that's what I thought it was going to do. When in these cases, I thought this one was going to go up. I thought this was going to go up. I thought when this did this, it was definitely going to bounce. Now I'm not sure that the steam is still in it, and I would need to see several different signals for me to be like, okay, this is now going up, because it seems like the volume is now trailed off to a large degree. Certainly we're getting these pops in here, but there's a ton of factors that go along with this. And one of the other things, one of the reasons that I'm trying to stay in, one of the reasons why I wouldn't stop out on a position like this, is because when I look at what I consider the sentiment indicators, guys like Data Dash, guys like Ivan on Tech, and other people in the crypto space, they're all happy-go-lucky, thinking things are going to go back up, and sometimes that means they're actually going to go down because people don't know what the heck they're talking about. And how Tone Bay says it is that markets have a curious way of separating people from their money, and just making everybody hate their life. And that's something that I've seen when, everybody thought that things were going to go back up to 12 after 6. They went down to 3. And then vice versa, people saying it's probably going to go down below 3, and no, they decided it was going to go up to, potentially 6,000, which people weren't saying. Now people are saying it's probably going to go up to 6,000. Makes me think, maybe 58 is the end here. So, I'm not sure at what point that I would stop out of this 53. I surely wouldn't take a loss on it, because I've kind of already made a little bit of profits, and it probably means that my break-even point is lower than original, probably something like 52.50. Now I don't feel like looking at the actual positions and doing the math on that right now, but I know that by recycling some of my profits and then cashing out, I've actually have a larger position now, but it's base price. I don't know how to say it. Its average price is actually lower than where I originally bought in, essentially because I'm making profit. And now thinking about it that way means that I'm including all of the profit that I made in that break-even calculation. So if it goes back down to that level, 250 or something like that, and I cash out then that will mean that I broke broke even on the long trade and then the couple of trades that I've made in here as well. If I wanted to keep some of that profit, I pretty much just have to, if I cash out at 350 or, my original buy price, now that is a profit. I'm in the profit now. And so I'm not quite sure where I will stop out. I'm not good with this strict rules yet. I like to watch the charts, figure out what I think, and then move on from there. But to me, this does look like it could be setting up to go back down. I think that if it were to do so, it would probably bounce up first. But oops, wrong thing. But this is, what I would anticipate to happen. Maybe come up here, test this, blah, 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 and fall back down. Maybe catch support along this 200 or along this 144 or this 200 as it comes up. But it could also very well may do this and then go touch around 59, 61 or something like that. And that's pretty much, how the trades always are. You watch and then you react and then you manage your capital, which is really like the most important part of all of these things. How do I get rid of these? All right, whatever about that. But the last thing I want to say is just about Tone Vays, one of the other people I watch trading. He's certainly not a nice guy when you watch his channel. He is just like the only YouTuber I've ever seen that like doesn't say thank you for watching my stuff, or like, he has a pessimistic style attitude. But that is like one of the reasons I think he's a better trader than the vast majority of people I see. Dan is a great trader, but it's kind of simplified. Tone, I think, is probably, one of the best crypto traders in the space. Probably there's some crypto traders that don't make YouTube videos that are better than everybody. But he is really balanced, and has a lot of history in the space where his predictions seem to come true a lot. He's one of the few people who said that Bitcoin was going to fall from that 6,000 down to 3,000. He's, he mentioned in December of 2017 what he thought the potential lows were, and they, 3,000 was one of the potential lows that he said may come to be, and it did. Now he said there could be some lower prices as well, so like maybe there will be some lower prices. But he does a really good job of saying, if this happens, then this. If this happens, then that. And not getting glued to certain predictions he made or whatever else. Now, he also uses a different type of indicator called the TD sequential or the TI sequential. It's basically a time indicator that I don't see anybody else use, ever. I've never seen anybody else use it. But it's, man, it seems super effective. And as I watch more of what he does, just to be honest with you, sometimes when I see his channel and he's talking about, nines coming or a 2 above a 1 or on specific time frames, I might say, okay, that looks like a good time to go in, especially if other indicators that I'm looking at line up. So it's a different indicator that eventually I'm going to buy from him because he has a version of it that will go with TradingView. And then I'm also going to study from the people that he studied from, like read the books on it, so that I understand how it works compared to some of these other indicators, because it seems like more accurate. I don't know how to say it. Moving averages and things like that, they're all kind of just shapes, like Fibonacci things. They're all kind of just shapes that people kind of subjectively say, okay, this might go up here, it might go down here. With the TD sequential, it is factoring in time of moves. And just even watching him on the channel has helped me to better understand. So my way of learning from different traders, eventually, I might move off of Tone Vays, I might move off of thechartguys.com just to find somebody else's system. But if you watch guys for multiple days, even if you're not doing the same trades as them, you'll start to understand their vernacular, the way that they talk about charts, and then the way that they think about trades. And that's basically what I'm trying to pick up. And then put my hands in it, mess around with a little bit of money, so I don't lose my shirt, and see if I can pick up these patterns, start develop my own habits and, decision-making processes for these, because this is something that, if I had had a better understanding in middle and high school, somebody who or maybe a system for analyzing my strengths and weaknesses, and then putting me into a career path, this would have been I should already be a millionaire, basically because I'm good at trading, and creating rules and then moving forward with those rules. So, again, I've traded Forex. I'm trading crypto right now. I have an M1 account that I'm starting to build a stock portfolio. My first time playing with stocks. And it's, you know, that again, that's one of the reasons why I'm not using TradingView, is because I would, without a doubt, try to, and M1 is not built for this. It has these pie things that are not, it's not built for traders. And I would try to get in at good positions on companies that I wanted. I would look at too much research on these different companies to see what I thought about their fundamentals and things like that. Not want to go down that rabbit hole yet because I have work to do. So I just want to make a trading diary. This is the first episode of that. You can see that I've made some, you know, trades right now that are in the win column. In order for them to actually be wins, to be realized wins, I have to cash out. So I'm in a winning position now, but if this is the end of this move, and you know, I don't really, it's not necessarily a very good one, but you could see a, oops. You can see some type of head and shoulders that might be forming, and maybe, you know, you could say this is the second shoulder, but I wouldn't call that one the second shoulder myself. So why can I not select these? Okay. So that's it for this one. I don't need to ramble on about this too much. Obviously, hopefully nobody will watch this or try to follow my trades after me because I don't know what I'm talking about yet. But if you want to like and subscribe, or if you want to troll me, which would be great and hilarious, I mean, go ahead and do that. I am going to come out with more videos. I might have a trading diary every day at a certain point, and I will definitely be switching over and moving on to the investing side soon as well. I might even cut in an M1 video right after this, just because when I looked up how to do pies on M1, the videos that came up first were all wrong. They're just like flat out wrong, and then I had to figure out how to mess with the pies later, and now I know how to do that, and I bet I can create a video that might rank for some of that and get some traffic. So I'll stop rambling for real this time. I don't really have a exit or intro. Please talk crap. Please talk crap down below if you are so inclined. And until next time, peace.